Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to look at a few sector ETFs that have some very interesting patterns, especially given the fact that yesterday, first trading day of the year, was one of the worst since 2008, and in fact, since near the lows, the Dow was having its worst opening day since 1932. So are we sitting at a bottom here, or is that the beginning of a big move down? Well, I've got some ETFs for sectors that have, as I said, very interesting patterns. So let's take a look at those. But before we do, I want to make sure that you know that you can see these videos at marketgauge.com/tutorials along with more commentary and additional videos. Also, if you're not already following us on Twitter, you can follow us at MarketGauge and at Market Minute. And if you're not already watching this video in HD, you can simply change your settings in the lower right-hand corner and everything will look a lot clearer. So with that in mind, let's get started. So yesterday, first day of the trading year, we're looking at the Qs here, NASDAQ 100 QQQ ETF. I'm pulling this one up first just to illustrate where the markets are. That black line is the 200-day moving average, and probably even more important, we're just at the bottom of a multi-months of consolidation, which is just I would say almost a fraction, 5% away from new all-time highs. So all this consolidation, the market gaps down to start the year. Is this a gap down that is going to turn into a bear market, or was this a head fake because we all got freaked out about China? Well, I'm not going to try and answer that. I'm going to let the market do it for me. And more importantly, you could trade QQQs based on this range around the 200-day moving average. I'll let you do that however you'd like to. More interestingly, I think, are some ETFs that, despite the really negative start to the year, these ETFs held up very well. Now, oftentimes, industries or stocks will completely change their tone in January. So one of the ways to keep an eye out for that is to look at the first trading day and pay attention to what happens on that day. Now, yesterday was a great example of this, and I would say this about other trading days as well. If you've got a really big down day, and then you have a stock that does really well on a down day, you want to pay attention to that. Now, energy has been a dog, and I have admittedly been wrong at times, looking for a bottom in energy around here, around here. I thought this would hold. So no bones about it. I definitely have felt the bottom, the potential for a bottom here before. Now, I'm not actually going to say it's bottom here, but what I will point out, and what I want you to pay attention to, or at least be aware of, is that while the whole market gapped lower, OIH actually closed higher than the prior day. So if OIH gets back over, say, this 27 levels consolidation, this could be an indication of a turn. Now, how high up that turn goes, I don't know, but even if it just goes back up to the 200, that's 32, 27 to 32 is a $5 move on a $27 entry. That's a nice move. Now, what you're looking at down here are triple play indicators. I will talk about those in a minute. And let's also, whenever I look at OAH, I like to look at XLE as well. So what I'd like to see is really both of them turn up and trade up on the year, basically. So up over the yesterday's range and over recent consolidation. So let's round it up to about 61. So that's what I would keep an eye out for. All right, now this is kind of part of what we look at in our January trend trade here at Market Gauge. And if you want to learn more about January trend trade and the power of January, there'll be a link to it right either above or below this video at marketgauge.com/tutorials. And if you do want to learn more about that, there's a live session that's happening today, which is Tuesday, January 5th. After that, if you're looking at this video in the future, then it's probably not going to be available. So that session will look at how we can trade the different steps that trends go through in January to make reversals or to simply reassert current trends. So in this case, we'd be looking at industries that might have indicated, based on a strong first day of the year, that they may change direction. So, but remember, it's not an outright buy because they had one good day. You want to see some follow through here. And then depending on how advanced you want to be with January trend trades, you'll look at patterns going forward. Now the next one is somewhat energy related, but not exactly, TAN. Now I've talked about TAN before in this particular blog segment. We picked up huge volume either down in here or down in here. I don't have the volume on my chart right here. We had record volume down there. So in this case, we were spot on with the turn in TAN. But the other thing that we had in TAN, we didn't have it in the other industries that we just looked at, is we had positive triple play indicators. So this first volume, or this first indicator here, is a price leadership indicator. And when the blue line is over the red line, you've got positive price leadership, a trend that's stronger than just whatever the market's doing for the stock. And this bottom indicator is a similar idea, but it looks at volume and whether or not volume is coming into or going out of the stock in an unusual way. And it's as simple as the top one, which is if the blue's over the red, that's what you want to see. So you can see when we came off the bottom here, both of these were also kind of had retraced back to the red, but they were in positive territory. And now as TAN potentially turns in 2016, these things are already in gear. So that is what we like to see. And that's why I think TAN's particularly interesting. Now, it's been interesting, but yesterday's action really brings it to the forefront. And now, especially if we can get back over this green line here, which is the 10-day moving average. So once again, I'm saying keep an eye on TAN. I know I said it lower, but I don't think you've missed the whole move. Now, the other thing you want to look at with the opening of the year or a big gap down is, what gap down into some really good support that's got a decent trend. So XLP, I think I may have talked about this one in this blog previously too, has really shaped up, and a breakout up here would really have, I think, probably surprised a lot of people and looked really good. We're talking about consumer staples here. Now, the gap down pulled it right back down to the 50-day moving average, and which is the magenta line, and right into some serious support. So if the market turns higher, if the market holds here, that Qs holds the 200, starts to drift higher, this one, again, I said it before, I'm still focused on it. An entry down around these levels in a market that starts to move higher looks like it makes a lot of sense. It's a great place for it to stop. It didn't outperform the market in terms of yesterday's market action, but its gap down didn't put it into such a vulnerable place as so many other stocks and ETFs are. So that means that you have two opportunities here. One is if the market trends higher, right off of yesterday's gap down, we're kind of still in the process of figuring that out as a market, then keep an eye on this to be one of the leaders. And two, if the market does make a leg down, watch this to see if it can hold this 49 level, or basically the lows that it put in on the yesterday's gap. All right, so on a down market, see if this breaks down with the market. If it doesn't, then it could be an opportunity there. And in an up market, expect this to follow the market up. Now, the last one is XRT. Now, I have not been a big fan of XRT. It's really acted horribly. So for me, it's almost hard to even suggest this. But it really did perform well yesterday relative to the overall market, and it's right at major support. So if there was a point at which this thing could be indicating it wants to turn, yesterday could have been the day. right? I personally don't have so much conviction in it to say that if you were to buy it here, that it's worth risking all the way down below the 42 lows. But if you're a nimble trader, you might look to try and get into positions where you can put your stop using the opening range tactics, perhaps that we teach, tight stops below the lows of the day, and you just might find that this opening day of the year could have been a bottom. This is one that I think the overall market will have to rally in order for this one to work. If the whole market just rolls over, I would expect this one to roll over with it. But again, looking for some signs or some places to perhaps buy this dip. These are some places I would look. And as I've said, if you want to learn more about these triple play indicators or the opening range or the January trend trade, check out the link that will be posted along with this video at marketgauge.com/tutorials.